Good morning, everybody. A very blustery Thursday morning. I hope all your gardens, etc., are intact and nothing too bad has happened overnight. But we're here this morning to take you through some more blustery issues in terms of IR35 and the off-payroll rules that will be coming in April. And I'm joined this morning by Stephen Tenhove and Will Walsh, partners in the employment team at DMH. And Stephen and Will be doing the IR35 session. I will be looking at the budget from the perspective of the employment impact. So I'll have a quick 10 minutes shortly to do that. Just a little bit of usual housekeeping. So if you do want to pose questions, please do feel free to do so. We will do that on the usual Q&A button, and we'll endeavour to answer as many as we can. We will record the webinar, so you can catch that on our internet at a later date. If you want to share at all with colleagues, or you want to go back and check anything yourself, and we'll also share the slides as well. So, the budget. So last week, Rishi Sunak seemed to give again. So what we have is the emergency lifelines going on in terms of furlough, and I'll talk a little bit more about that in a moment. I refer to them as emergency lifelines, but unfortunately, it probably feels a little bit now like they're almost the norm. Emergency certainly at the end of last March, when we were looking at how we were going to get through the pandemic from the employee issues. Now, almost 12 months on, it doesn't perhaps warrant the word emergency. By the time furlough ends in September, it'll have been with us for 18 months. So I don't think that necessarily counts as an emergency anymore. Was the budget a quick fix, papering over the cracks? Was it simply kicking that horrible financial pain further down the road? Well, for some businesses, unfortunately, it probably will be. So whilst we've got temporary extensions in terms of business rates, VAT issues, and obviously the employment support schemes, we do have obviously quite a lot of pain still to come. And I think what last week's budget did was probably just give us a few more paracetamol to get through matters until we are at the end of September, and possibly will have worked out how we get back to normal. Obviously, in the future, from a business perspective, there are going to be tax rises, corporation tax rises, tapering depending upon company profits. There has been an awful lot of give. We know there's been an awful lot of give financially, but there is also going to be a lot of take in the future to get through that tax burden that is the highest for the last 50 years. Furlough obviously is putting money back into the economy at the moment. So we need that spending stimulus to keep things going. But unfortunately, we do have a fairly grim, although not quite as grim as forecasted, picture in respect of unemployment. So whilst it was forecasted to hit at around 10% unemployment, it's actually now been reforecasted to hit at 6.5%. But that's still grim when you look at pre-pandemic unemployment of 3.8%. And I think it's particularly grim when you look at the fact that a lot of that unemployment comes from the younger workers and graduates, school leavers, those between sort of 18 and 24. We're going to see a lot of unemployment because they don't have the skills and experience. They need training up for that, and employers haven't had the time and may not be prepared to invest in that. So again, part of the budget was starting to look at how they continue to improve the youth training programs and also further support, not age related, but further support with upskilling businesses to make sure they have the necessary growth for the future. So just moving on to furlough, which has, I think, absolutely been the star attraction, not just of the budget, but of the support measures that have been put in place since last March. So I think we all know that it's been extended until the 30th of September. So another 7 months of furlough for people, or potentially another 7 months of furlough for people. And as I said before, that's making 18 months of furlough support. Now, there probably aren't that many individuals that have been on furlough for that full time, or will be on furlough for that full time. But even a 3 month, a 6 month, a 9 month furlough period for people, it is, you know, it has been difficult. It will be difficult. There will be back to work issues. There will be mental health issues. There'll be issues in terms of making sure that they have the skills when they come back to work. There'll be issues in the future as well about how do you deal with that period where people have been on furlough for things such as promotion opportunities, for, you know, I hate to say it, but, you know, it will happen, you know, redundancies in the future that have got to be assessed, and people are selected for a period of time they weren't actually in work. So it is going to create some head scratching on, you know, a number of issues, even though at the moment it is for most employers a very welcome extension. Employees will still receive the same 80% with that $2,500 a month maximum. Employers are going to have to start contributing to that 80% from July with a 10% contribution, and then August and September with a 20% contribution. Now, we may have a new group of employees on furlough because provided they were employed as at the 2nd of March 2021, provided the employer had submitted the real-time information to Hmrc between March 2020 and 2nd March 21, then those employees are now able to be furloughed and claimed for with effect from the May onwards period. A word of warning in terms of who you are putting on furlough, and obviously who has been on furlough in the past. The budget introduced more funding for Hmrc for their Taxpayer Protection Task Force to investigate furlough fraud. So apparently there are over 1,000 Hmrc employees looking into this. And I think at the last estimate, there was something like 10,000 open investigations into potential fraud. Now, that's probably partly because you've got some disgruntled ex-employees that are trying to cause some problems, but there will be some genuine fraud issues out there, and Hmrc are going to root them out. So furlough, obviously, it's been too late for many businesses because they may well have laid people off, made them redundant back end of last year, not expecting that furlough would continue for as long as it was. But I can't see it going beyond September unless something horribly wrong happens with the vaccination programme. But, you know, I don't think we can see it as a forever lifeline. It may come back for, you know, sort of temporary periods if there is something that happens, because the structure's there now. But, you know, I think come the end of September, we have to accept that employment support is not going to be there. So 11 million people so far have been the beneficiaries of furlough. At any one time, there's been 8.9 million people on furlough. Whether that 11 million, well, that 11 million probably will increase with the new cohort of employees that potentially can be put onto furlough going forwards. But it's not just furlough that is relevant in terms of the support schemes. We've got the self-employed income support scheme, and quite rightly, alongside furlough, the continuing support has been put in place for self-employed individuals, with the 4th and 5th grants now announced to cover the period up to, again, the end of September. Now, what this is going to do is it will also cover a new group of self-employed individuals. So those who had submitted a self-assessment tax return by midnight on the 2nd of March are now going to be able to benefit from the Self-Employed Income Support Scheme grant. And it's estimated that's about another 600,000 more individuals. So provided their trading profits are less than 50,000 and provided at least half of their income comes from self-employment, hopefully a new group of individuals will be getting that notification from Hmrc that they can claim the grant. Now, the support's going to be targeted in respect to the 5th grant. So any self-employed individual who has not had their profits drop by more than 30% will actually only get 30% of the 7,500 sum. So that's a maximum of £2,850 for the 3-month periods that those individuals will get for that last 5th grant. So 4th grant can be claimed from late April. Some people not particularly happy about that because it does leave an income gap for the April period between receiving the 3rd grant and then being able to claim the 4th grant. So there is some financial pain there. And the 5th grant claimable from late July. Okay, I referred earlier to some of the skills support that the budget measures put in place. One of these directly relevant to sort of L&D initiatives is the Help to Grow management scheme. So this is effectively the government subsidising a management course, so what they refer to as an executive development programme for 12 weeks that can be done whilst people are in full-time work, and that will be available for small to medium businesses, those with between 5 to 249 employees, and the only payment is a small £750 payment for each participant. Now, we haven't seen full details. What we do know is that there are 30,000 places available over 3 years, so whether it's a case of form an orderly queue to make sure that you get on that, whether there will be the take-up, because you've got to query whether at a time when business needs to really get back on its feet, whether decision makers, the MDs, the FDs will have time to participate in a 12-week executive development course. So it looks positive. I'm sure there will be many people who will benefit from this, but it may be one of those where there is a very disappointing take-up. And then continuing with the Help to Grow initiatives, there's another one which is providing assistance with digital, not so much skills, but digital business changes that will have happened over the last 12 months, or will certainly have been accelerated over the last 12 months. And the Help to Grow digital is probably reflecting the fact that there have been a number of business changes where organisations realise they don't necessarily have the software in place to really move ahead as quickly and as effectively as they want. So businesses are going to be given a discount of 50% on certain software, up to a cap of 5,000. There's also going to be some free online advice on digital. But what I think will be interesting is whether there is going to be any software for training that can be claimed, because it's all very well and good putting in place new software, but employees need to know how to work it, and you need to invest in the training for that. So it'll be interesting to see whether any of that 5,000 can actually be used for training employees as well. But more details are going to be available in the autumn, over the summer, and then the claims are going to be from the autumn. Traineeships and apprentices, just a very quick whiz through this. So again, more funding put in place for apprentices, and more more perhaps innovative schemes in respect of what we are going to know as portable apprenticeships. So a £7 million fund from July to help employers set up portable apprenticeships. So perhaps again reflecting the move away from a traditional one employer scenario, and those apprenticeships can be transferred and worked across multiple projects with different employers. And then just finally, just to mop up perhaps some of the other issues that are quite pertinent to the employment landscape. So national living wage, perhaps not surprising, it's going to have its usual increase. But do note that the national living wage has previously been applicable to those 25 and over. It's now going to be for those 23 and over. So that's going to be increased from April. Also announced last week were the increases in the various tribunal limits and statutory redundancy payment limits. So those will all be subject to the usual increases on the 6th of April for dismissals taking effect after that period, and redundancies taking effect after that period. Personal tax thresholds. I think it was interesting that the Chancellor made a big point that nobody would be taking home less in respect of their income tax. That may be the same at the moment, but people who are going to get a pay increase, and that pay increase is perhaps not going to be quite as much as they ordinarily would have got had the thresholds been increased with the normal inflation rates. So there will be potentially less in employees' pockets post 2022 when the thresholds are frozen for at least 4 years. Query whether employers might want to look at other ways of rewarding employees if they're not going to get as much as they thought they would with regards to those pay increases. A number of immigration-related initiatives. Our immigration partner, Adam Williams, will be talking more about these over the next couple of months and as more detail comes out. But essentially, UK government wants to make it much easier for businesses to invest and do business in the UK. With regards to that, there is for particularly elite employees going to be a reduction in some of the immigration bureaucracy. So I think we're going to see easier immigration passages for those highly skilled individuals that UK business would like to hire. And then finally, the government have called for evidence on whether there can be changes to the EMI scheme, so the Enterprise Management Incentive Scheme, where share options are given to employees, again, to see whether employees can be better incentivised by the use of the EMI scheme. So those are probably the main budget takeaways. What the budget didn't do was say that for another year, IR35 was off the table. I don't think we were really expecting that, but it was a possibility. As it's not off the table, I'm going to hand over to my colleague, Stephen Tenhove, who's going to take you through some of the background to IR35 and how it's going to impact. And then Will is going to continue with some further detail in respect of IR35. And in the meantime, what I'll do is I'll look at some of the questions that have come up from my session, and we'll deal with those towards the end. But thank you. Stephen. Stephen. Hi.
Hello.
Hi, Stephen.
Hello, I'm sorry about that. I don't know what happened there. Thank you, Rebecca. I will deal with the legal aspects of IR35 very swiftly indeed, and then will provide you with an overview of practical things that you can do to assist yourself when considering whether your suppliers might fall into the new IR35 rules. I thought I might begin by just quickly rehearsing how IR35 itself operates, because the new rules are actually an exception, a carve-out from the original IR35 rules. So what we have, and what we have had since 2000, is the following. A worker provides their services, or if a worker provides their services, not directly to a business, but through a limited company that they control, known as a personal service company, then potentially IR35 kicks in. The worker provides their services to the business pays the worker's PSC for those services. If you take away the bit in the middle, the limited company PSC belonging to the worker, does the worker act as an employee? Are they a deemed employee when they're giving their services to the business using them? If the answer to that question is yes, then when the business pays the worker's PSC for the services that the worker has rendered, the PSC is meant to treat that income as employment income to which it applies tax through the PAYE system and national insurance, both employer and employee. If, however, the worker, when supplying the services to the business, and again ignoring the limited company PSC, is not deemed to be employed, then the business pays the PSC as usual, and that is income in the business's hand, which is usually paid to the worker as a director, dividends or something like that, on which the tax rate is much lower, and crucially, on which there are no employer national insurance contributions or employee national insurance contributions. So the question is, who gets to decide whether the worker, when providing the services, is deemed employed or not employed? And the answer to that question under IR35 is that it's the limited company belonging to the worker, the PSC, that decides. And this has obvious implications, because if you have to decide whether to pay more tax or less tax, you're going to choose the option generally where you pay less tax. So move on to the next slide, please. So a little history. IR35 was introduced in April 2000, and it almost immediately became apparent that there was widespread non-compliance. In other words, people were treating themselves as not being deemed employed when in fact they were deemed employed and should be paying tax on as an employee, or should I say their PSC should be paying tax as if they were an employee. And it's thought that about 85% of all PSCs do not comply with IR35. And despite this level of non-compliance, it took until April 2017 for Hmrc to do anything about it, when they introduced the off-payroll working rules for the public sector. So any public sector or quasi-public sector body had to decide when using a contractor whether that individual was deemed employed or not. If they were deemed employed, then they had to deduct the tax and not the PSC. In other words, the company belonging and under the control of the worker. This was a great success, and in May 2018, Hmrc consulted on whether the off-payroll working rules should be extended to the private sector. Swiftly, they decided that they would be, and that they would come into effect on the 6th of April 2020. And as Rebecca said a couple of minutes ago, one of the main announcements in the budget last year was that IR35 was going to be postponed by a year. And in fact, I did a talk about IR35 the day before the announcement was made. So it's been postponed, but it's definitely going ahead on the 6th of April this year. So in just a few weeks' time. The next slide, please. So what are the new rules about? Well, from the 6th of April, the payments that businesses make to workers who provide their services through a PSC will be subject to a new tax regime. Unless the business is small, and we'll come on to that definition in a minute, the business using the worker's services must determine whether the worker is deemed employed or not. If the worker they decide is not deemed employed, then nothing changes. They're a proper arm's length subcontractor and you pay their company's bill as you always do. But if the worker is operating as an employee, a deemed employee, then before paying the PSC, the business must pay the PSC less PAYE deduction, and it also incurs national insurance contributions, employers' national insurance contributions at 13.8%, and the apprenticeship levy at 0.5%. So the cost of the worker providing these services has immediately increased by 14.3%. And we will go into a few of the practical issues of this a little bit later in this talk. Now, it's worth noting at this stage that whether someone is deemed employed or not deemed employed under these Hmrc rules, it has no impact on the employment status of the worker doing the work. They remain simply a subcontractor. They don't become an employee merely because they're deemed to be an employee for the purposes of the off-payroll working rules. Thanks. Next, please. So, to put that in a diagram, and contrasting with the slide we saw about 5 minutes ago, the worker supplies the services to the business on the right. It has a limited company PSC, but it's now the business on the right which is obliged to look at the worker, decide whether they're deemed employed, and then deduct employee taxes from the payment that it makes to the PSC limited company. So the PSC is going to get much less money net than it did before. And you can also see that a workers' limited company, a workers' personal service company, is likely very small. But the business that now is making the assessment is by definition going to be quite a large business. It's going to have a proper functioning PAYE system. It's going to have a reputation. It's going to fear an Hmrc audit. And as a consequence of that, this is a good way the Hmrc has found to put pressure on the relevant sector of the economy. Could I have the next slide, please? So I did say there was a small company exemption. You're exempt from the off-payroll working rules if you satisfy 2 of the 3 conditions below. Your annual turnover is not more than 10.2 million. Your balance sheet total is not more than 5.1 million. And where do you get those 2 figures from? You get them from the last set of accounts before the tax year end. Or the number of employees is not more than 50. If you score 2 out of 3 or 3 out of 3 of these, then you are a small company and the new rules don't apply to you. What applies? IR35 continues to apply. It is the PSC of the worker supplying the services that has to make has to take the view as to whether they are deemed employed or not. Now, here's a question. How long will the small company exemption be around? I suspect the speed at which the government moved from the public sector, OPWR, to the larger medium-sized company sector, OPWR, suggests that if this is successful, I imagine it will be, they'll move on to the small company, they'll move on to abolish the small company exemption pretty swiftly, I would think, even in the current economic climate. Thanks. So here's a question, the first poll question of the morning. Assuming that you're in a large or medium-sized company, or even if you're not, if you've had an interest in this issue, have you already considered whether the suppliers that you use are likely to fall within the OPWR? Let's have a quick poll and see what the answer to that is. Right, so quite a large number of you have already sensibly looked into whether this is an aspect which is likely to affect you, either more or less immediately or in the medium to the longer term. I see that about 31% of people have not, and I assume that's because you're in small companies. But I would urge you to have a look at your suppliers' agreements and use the CES tool, which Will's going to come on to in a minute, just to take a guidance from Hmrc as to whether you're going to be vulnerable in due course. So the key question is the worker that you're using going to be deemed employed, or are they not? Are the rules going to apply to you or not? How do you go about doing this? Well, to remind you, the test of employment status for purposes of employment law is pretty similar, but is not the same as the test for purposes of taxation, including the off-pay working rules. In employment law, we first ask whether there's a contract at all between the alleged employer and the worker. If there is a contract, number one, does the alleged employer control the worker to a sufficient degree? Number two, is the worker obliged to provide personal services? Number three, is the employer obliged to offer work to the worker, and is the worker obliged to accept it? If any one of those is not present, then you don't have a contract of employment. If any of those are present, so you have a contract, control, personal service, obligation to accept and offer work, then you look at a whole series of other factors, and many of you will be familiar with them. There are at least 20 of them. But in my view, the following are the key ones. Does the worker take any financial risk? Do they lose money if they don't perform on time? Do they not get paid at all if they don't perform? Is the worker part of the alleged employer's organization? How deeply embedded are they in that organization? And that's tied in with the question of whether the worker is in business on their own account. And crucially, I think, does the worker provide their own equipment and insurance? And if the answers to most of these questions are yes, then they're unlikely to be an employee. If the answers to these questions are no, they're more likely to be an employee. But these are factors which are also taken into account by Hmrc when deciding whether someone is assessing status for tax. But the main difference between Hmrc and the Tribunal's approach to whether someone is employed or not is that the tribunals can simply ignore the contractual and structural arrangements between the parties entirely and construct a hypothetical contract. For example, and I've done a couple of cases on this, the fact that a worker has set up their limited company to supply services to someone they say is their employee is always, well, not always, but nearly always fatal to a claim that they are in fact an employee. But this is not a factor that is of concern to Hmrc at all. They will look at the factors and decide whether or not they think the employee is, whether this structure is deemed employed or not, and they will ignore the contractual relationships entirely. So that is a whistle-stop tour through this aspect of the IR35. And as I said, the carve-out from IR35, which the off-payroll worker rules are. I'm now going to hand over to Will, who's going to take you through the more practical aspects of how best to protect yourself and what steps to take with a view to the background law that I've just set out. Thanks very much, Will.
Many thanks, Stephen. So as Stephen mentioned, I'm going to be covering off the practical look at the IR35 changes and in particular what you need to do as a business if you have contractors working through PSCs in your business. So the first point is, as Stephen has already mentioned, so the key change through the new IR35 rules is the issue about who decides. As Stephen mentioned, up until now, it's been the contractor themselves that makes the decision about whether they're employed or self-employed for tax purposes. Going forward, that responsibility is going to fall on you as the client. So that's going to be the starting point. And of course, you as the client are going to be potentially responsible for tax and national insurance payments. So you as business are going to have to make those determinations in respect of every contractor that you have in your business who is operating via a PSC. In some circumstances, say in a lot of cases, the contractual arrangements will be fairly simple, and you as a business will be taking on the contractor directly via their PSC. In other words, you contract with the PSC, and it's as simple as that. However, there will also be circumstances where there are other companies, possibly agencies or other intermediaries in the chain. In other words, rather than you as a business having the contract with the PSC company, you contract with an agency or another supplier. They in turn agree to supply you with contractors, and those contractors are provided via PSC. At least 2, maybe 3, sometimes even more companies in the contractual chain before you finally get between yourself all the way down to the contractor themselves. Where that happens, again, the starting point is that you as the end client need to make the first determination on tax status, employee status for tax purposes. And then once you've done that, you then pass your determination to the next entity in the contractual chain. So if you've got an agency supplying your contractors, you do your determination, you then pass your findings to the agency and to the contractor. And at that point, you effectively absolve yourself of responsibility. It then becomes that agency's job to deal with it themselves. And if there's more companies in the chain, they do the same and pass it further down the chain until you get to the entity that actually pays the PSC and is responsible for the NICs and income tax. If you don't do that, if there are the companies in the chain but you fail to complete your determination statement and fail to pass it down the chain, then liability sticks with you. It doesn't keep on passing on down the chain, and you are deemed to be the fee payer, and you will be responsible for paying any tax and NIC. So it's important that you get that done. So that then begs the question about how you actually go about doing it. Well, one possible option is that you simply decide yourself. Stephen has mentioned the factors that you would look at in working out whether someone is employed or self-employed for tax purposes. So you could simply make your own assessment. However, alternatively, there is also a government Hmrc tool, which we call the CEST tool. CEST stands for Check Employment Status for Tax. And it's really easy to find. If a simple Google search of CEST tool will give you the result that you need. And I'll show you what that looks like. So just moving on to the next slide. So you'll go through a couple of preliminary some general pages on the website. And then the first main question you'll get will be this one here. It'll ask you the question about what you're using the tool for. And actually, you can use this tool for 2 different things. One will be to work out employment status for IR35 purposes, and that's what we're looking at for these purposes. You can also use this tool for if you've just got no PSC involved, if you just have workers in your workforce who work on a self-employed basis, this tool can be used to work out their tax status as well. But for these purposes, we're going to be clicking on that first option because we're looking at the IR35 rules. Once you've done that, it will then launch you into a series of questions. It will examine all different aspects of the working arrangement. I've got an example here about the ability for the worker to send a substitute. The number of questions you will get asked will be determined by the responses you give. So again, for example, the one we have on screen here, if you say, yes, we've accepted substitutes in the past, it will stop all questions about substitutes. That will be good enough. If, as on the screen here, we say, no, the contractor has not sent substitutes to do the work in their place before, it will then launch into 3, 4, 5 further questions to drill down into more detail. So in total, you'll probably end up with about 20 to 30 questions in total. And as I say, it will cover things like the right to send substitutes. It will cover how someone's paid, their hours they work, whether they do provide services to other clients, the degree of control over their work, who will fix mistakes, all of those sorts of things. And once you've done all of that, you'll get to a final page, which hopefully will look like this, if indeed the person is self-employed, and it will give you the result that says off-payroll working rules do not apply. Do not apply means that they're not caught by the IR35 provisions. In other words, they are self-employed and there's nothing further to worry about. It may also give the result of saying that the rules do apply, which in other words means that they are an employee. And there's also a third that you'll get, slightly more unhelpful, that will say unable to determine. So just moving on to the next slide, just to examine that in a bit more detail. To say the main advantage of the CESS tool, first of all, it's pretty quick. Once you've been through it once, then and you're familiar with the sorts of questions that get answered, it's it's literally 3 or 4 minutes probably per additional worker after that, maybe even quicker if you have a number of workers who broadly work in the same way for you. So that's an advantage. But the key one is that Hmrc have said that they will respect the result. So as long as you give your responses honestly and accurately, when you get that final result page, that will be good enough as far as Hmrc are concerned. That will be evidence that the person is or isn't self-employed. So that's a huge advantage. On the previous slide, we saw the result. If you scroll a bit further down the screen, it gives a bit more detail, and you can click on a button that prints out the result, and it will also print out a summary of all your responses as well. So that could be quite useful for the next stage of sending your results to either the contractor or the next person down the chain to explain how you reached your conclusion as well. As I mentioned a moment ago, there are unfortunately a small percentage of cases that will give you the result of unable to determine. I think probably typically somewhere around sort of 10 to 15% of results will come up with that end result. If that happens, then unfortunately it's then back to square one, and it's up to you to make the determination again. So you will have to again go through the factors that Stephen highlighted earlier to work out, take your own view on whether the contractor is employed or self-employed. Some good news, however, is that Hmrc have said that they are going to put in place a 12-month penalty holiday. So basically, up until April 2022, as long as you've taken reasonable care in your assessment, so it's not an excuse for us to disregard the new rules, you still need to complete your assessment. But if you were to make an honest mistake, so that, for example, you get the unable to determine result, you form your own conclusions, it then turns out that Hmrc takes a different view and tells you that you've got it wrong. What they have said is that they will not impose any penalties on you as long as you've taken reasonable care for the first 12 months that the new rules are in force. So that at least gives us some comfort that it gives us that period of time to try and iron out any particular difficulties. So just very quickly, just put a little bit of sort of flesh on the bones. I've highlighted a few past cases. Again, they're going to be public sector cases generally, as the IR35 new rules don't apply to the private sector yet. But just to put a bit of flesh on the bones, to give you some examples about factors that are important and less important. The first case that I've got there is the Pyre case, which was a case involving 3 BBC presenters. And in that particular case, the issue from the BBC's point of view is that while they were described as being self-employed contractors, the individuals were obliged to make themselves available for a minimum number of days. And in reverse, the BBC was also obliged to pay those individuals for a minimum number of days. There were some other factors in there as well, but that was sort of the key one, is in that the tribunal determined that because of that, what they call mutuality of obligation, in other words, the contractors didn't have a genuine choice as to whether they could accept or decline work, and vice versa. The BBC was stuck with those individuals. They couldn't offer the work to other people. They were guaranteeing that those individuals would be contacted first in terms of those projects and would be paid, come what may. Then that sense of obligation on both sides was deemed to be enough for them to be deemed to be employees for tax purposes. So again, that's something to bear in mind. That's quite important, that mutuality of obligation. Second case, I think is quite good news from business point of view, the Novasoft one, and this is about the right to substitute. There's been quite a lot of nervousness from clients I've spoken to about the amount of emphasis that seems to be placed on the ability for a contractor to send a substitute in their place and how important that is. I'm certainly not going to dismiss it as being irrelevant. However, the Novasoft case basically had a situation where you had a contractor, there was a contractor who provided services to one client for a period of 4 years plus. They'd never sent a substitute in that 4-year period. It'd always been them providing the services, and they hadn't provided services to anyone else either. And nevertheless, the determination was that they were still self-employed for tax purposes. And the tribunal made the comment that it's not a question of having a checklist and just ticking off the boxes and then tallying it up and seeing what the result is. They will look at the overall reasons and the relationship behind it. So you will get cases where you have a certain contractor that, because of their unique skills and experience, to be honest, they are the only person who could possibly provide those services to you. So the idea of having the ability to send a substitute in their place just isn't going to work. If that's the case, I wouldn't worry too much about it, because it's going to be a question of looking at the overall picture and the reasons behind it. I mean, what I would say about the right of substitute is, if someone does have the right to send substitutes and does actually send substitutes, they will almost certainly be determined to be self-employed. But it doesn't necessarily work in reverse, that if you don't have that, or it doesn't happen in practice, it doesn't necessarily follow that they will definitely be employed. It depends on the circumstances. And then the last case, again, another BBC one, the Krista Ackroyd Media Limited one. And this focused on the issue of control. And what the tribunal determined in that is that the BBC basically tried to say wasn't control, that the individual interviewers, the presenters, didn't have there were no formal appraisals, and then suggested because of those things there was no formal control of employees, and therefore because of that the BBC said that they are self-employed. The tribunal disagreed, and they said, well, no, there wasn't the formal control, and therefore the BBC had ultimate say on when work was going to be done, who was going to be interviewed. The BBC could edit the interviews being done. They could determine what questions were going to be asked, and therefore there was enough control there to mean that they did have, therefore they were deemed to be employees. Moving on. So again, it's quite possible that if you carry out your determination and your result that you get is you conclude that I think that this particular contractor is an employee for tax purposes, there is every chance that that contractor may want to dispute that outcome, particularly if they've worked for you for a number of years, they've done their own determination, and they've always deemed themselves to be self-employed. Unlikely to be a dispute the other way around. Someone's hardly going to complain about you saying that you think they're self-employed and they should pay less tax. And the worker has got the right to raise a dispute with you, and effectively what they do is they contact you and they tell you why it is that they disagree with your determination statement. If they do that, then you have got a 45-day period to deal with that. The outcome of which it could be that you look at their points and you think, okay, fair enough, we've possibly entered some of our questions in the CESS tool incorrectly. You adjust them and it gives you the opposite result. So you're allowed to change your mind and issue a new statement with the opposite result if you've been convinced you genuinely got it wrong. Alternatively, you decide that your original assessment was the right one, in which case you go back to the worker and you stick with your original decision. But you have to do that within 45 days, one way or the other. And if you don't do that, then I mentioned before that you have the ability to pass the liability down the contractual chain to any intermediaries or agencies and wash your hands of liability. If you don't deal with the complaint, so you've passed your determination statement down the chain as you're supposed to, but the dispute liability comes back your way. So if you haven't dealt with it, you are then deemed to be the fee payer, and you assume potential liability for any tax and NICs that has to be paid. So it's really important. So 45 days seems a reasonably long time, but actually those days can tick off pretty quickly. So it's important to have robust policies in place and processes, and work out who is going to deal with those so they get dealt with promptly, so you don't end up getting your fingers burnt by mistake. So finally, we can move on to our last slide. A quick checklist of what things you should do next. First point, a fairly obvious one, is work out whether you are a small company. Stephen mentioned the exemptions and the rules that apply there. So the first thing for you to do as a client, as an end user, are you a small company? If you are, then there's nothing further to do, nothing has changed. If you're not a small company, then there's a few things. I mean, the first one is you need to prepare your business for the possibility that contractors may look to switch and go and work elsewhere, because contractors like to have control by and large. They like to be in charge of the decision over whether they are or aren't self-employed and how much tax they're going to pay. They can keep that control if they're working for small business. So potentially there is an attraction for the clients and for the businesses that mean that they can continue to keep that control. So again, if you're a larger business, again, be alive to that possibility and start to think about how you might protect your business for the future if contractors start to get nervous about it. Second thing is clearly you need to carry out that audit, which again, as per the poll, I think a lot of you have done that already, some haven't yet, but you need to identify which contractors you have and which of those contractors supply their services via personal service companies. Part of that thought process might be, do you want to keep things the same going forward, or should you actually start to engage them as actual employees going forward? Particularly if you've done your CESS calculation that either gives you unable to determine, or possibly even this person should be treated as an employee for tax purposes. As Stephen mentioned earlier, there is a difference between employment status for tax purposes and for employment law purposes, but nevertheless, if they are deemed to be employed for tax purposes, there is certainly a genuine risk that they could be deemed to be an employee for all purposes. So again, you may think that it's actually better to have clarity and avoid potential dispute further down the line, to start engaging in a different way. So that's certainly something you could look at. I'm not saying you have to do that, but it's certainly something to look at. Then, of course, there is your CESS tool analysis. That's something you should do now if you haven't done already. And again, another good way you can use the CESS tool, that if it gives you an unfavorable result, so you input your answers and it tells you that the individual either unable to determine, or that the person is deemed to be an employee for tax purposes. Quite a clever thing you can do at that point is you can go back and adjust some of your answers. I'm not suggesting for a moment you adjust them for the purpose of sending a false result to Hmrc, but what I mean is that you can tweak your results to look at which particular factors caused a problem in the first place, because it doesn't actually tell you that in the result. It'll just give you the result, it'll give an indicator, but it won't drill down to the fine detail about which particular answers caused problems. So by going back and reusing the tool, it helps you to identify which aspects of the working relationship were the problems from the CESS tool analysis point of view. And that then allows you the possibility to think about the working relationship and think about, are the things in the contract or how things are done in practice that you could change going forward, that mean that actually someone who is currently might be deemed to be an employee, going forward you can change that and make them genuinely self-employed. So that's something you should look at as well. Next point, on a purely commercial one, will be if someone is deemed to be an employee for tax purposes and there's the extra 14.3% to pay, the question is who's going to bear the cost of that? So one possibility is you carry on paying the contractor in exactly the same way before. They will end up, and by that I mean the overall gross amount will be the same as before, which means that the contractor's net pay that they receive, they will get 14.3% less after you've deducted the tax and NICs. So they bear the cost. Or alternatively, is it going to be a question of you having to or the contractor bumping up their prices so that once tax has been paid, they end up receiving the same net sum as they did before. That's basically going to come down to bargaining power and ultimately a commercial negotiation, depending on how important the contractor is to you and vice versa, how important your work is to them, which is ultimately going to determine that particular one. And then finally, as I mentioned before, it's a good idea to start thinking now about your dispute resolution process to get that. It's mandatory to have one, but more to the point, you don't want to fall shy of the 45-day limitation period for dealing with disputes. So it's a good idea to get robust processes in place now. And that is all I'm going to say.
Thank you very much, Stephen and Will. We've had lots of questions come in on the IR35. Just a couple on the initial furlough, which I'll just deal with very quickly. So we had a question in respect to 2 p.m. furlough. So in the event that you have transferring employees, but the employees in your business that they're transferring to on furlough are on furlough, do you have to have those transferring employees also put onto furlough? No, not at all. You can choose who you want to put on furlough. And equally, if those transferring employees are already on furlough at the point that they're transferred, be very careful about taking them off furlough just because of the transfer itself, because they'll have signed up to a furlough letter which has changed their terms and conditions. So you'll need to check the furlough letter terms and conditions to see, the arrangements you need to put in place to take them off furlough. And then in terms of the Hmrc investigations into furlough fraud or audits, I think it's important to make it clear that Hmrc will be investigating fraud. What they won't be doing is investigating where there's been payment mistakes. Those payment mistakes are going to be rooted out probably by employees and solicitors, claims solicitors, who are going to be looking over the course of the next 12 months at where there might have been some payment errors and therefore unlawful deductions in respect of furlough. But Hmrc, for their furlough fraud, will primarily be looking at those situations where employees have been put on furlough but then have been required to actually come in and do some work. They'll be looking at situations where directors, particularly in small companies, have put themselves on furlough and then they have actually done some work. So they've not just done the work, which is making sure they've filed companies' house returns, etc., but they've actually gone in and effectively ran the business for their period of furlough. So there are, I know, quite a lot of accountancy firms doing furlough audits at the moment, and as part of the annual audit, they will be looking at how furlough payments have been made. But Hmrc really aren't interested in that sort of payment error. It is the deliberate claiming of furlough when somebody is, effectively still working as normal. But just moving then to the IR35 questions with the remaining time we've got, there's been a lot of questions. I'll do some quick fire ones first, which hopefully can be fairly yes or no. Does IR35 apply to charities and not-for-profit companies? So Will, Stephen, I'll leave you to jump in.
Yes, is my.
Yes.
I'm not aware of any exemption for anybody at all.
No. So I think unless they have the small company exemption, then they're going to fall within the IR35 regs. Does a PSC always only have one employee?
No. It is possible for the Inland Revenue. What amounts to a PSC is quite complicated and is a topic in itself. But partnerships can be personal service companies, limited companies can be, groups of individuals can be. The key issue is that a particular individual controls the company and receives payments from it. But it's quite a complicated matter. But it isn't the mere, if it comes a company which is owned by more than one person or is manned by more than one person, that doesn't necessarily mean they're not a PSC. But I have to say 99% of the PSCs I come across are one-man, one-woman bands. But but on the edge, there's a lot of complexity.
Okay, well that takes me that answers my next question, which was how does one decide what is a PSC? And I think, Stephen, you've said that's quite complicated.
Rebecca, assume the worst is my and also I'm often astonished by how people are ignorant about their own setups. So you ask someone a question about a limited company, they say, "Oh, I'm the director of it," and you find that they're not. Or, "Oh, I'm the shareholder," and you find that they're not when you look at them. My view is that you should assume the worst. If you think somebody is essentially a sole trader or a sole person through a limited company, or it's a small company, I would check it out very carefully yourself. Details of limited companies are available at Companies House, many of them for free. And I just assume the worst and take them through the CES tool that Will has outlined in the talk.
Okay, I think this is one for Will because it resonates with the substitute issues. But somebody posed the sort of the comment and the question of, can you send a substitute question? Seems to sink everybody, particularly I think on the CES tool. If, for example, it was commercials production where a freelancer is engaged, they're usually engaged for a couple of days at a time, and they can never send a substitute. They simply would not be accepted by the engager if they sent a substitute. So, you know, is that going to always sort of sink, sink that individual for falling within IR35?
No, I don't think it will, because again, while sending a substitute will almost certainly put them on the self-employed side of things, it doesn't work in reverse. So it's not fatal if you can't send a substitute. To say it's going to be a question of looking at the whole approach about all the aspects of that freelancer's working. If they tick enough of the other boxes to put them in the self-employed camp, then the real world will come into it. There'll be circumstances where it's just impossible to send a substitute, and you never would. That in itself won't deem them to be an employee, as long as the other working elements do make them self-employed.
Okay, and then I think just one final question for Stephen. We did have a question about sort of overseas issues. It was quite a complex question that I don't think we're going to be able to do in, sort of do justice to in the time we've got. But I think it's a more general question. Do the IR35 rules apply to contractors who are based abroad?
What a lovely question. The answer is a tax accountant's answer rather than a solicitor's answer, I think. But the question is whether they're domiciled for tax and where they execute the work. So if you're domiciled abroad but you execute the work here in the United Kingdom, then you're likely to be subject to these rules, as I understand it. It is possible to do work incidental to your main task for a client in this country if you are domiciled for tax purposes abroad. But I'm afraid that generally speaking, I take the precautionary principle. If someone is executing work for you in this country, then you should assume that the off-payroll working rules apply if they supply their services through an entity that they control themselves. Is the very broad answer to that question. But crucially, it depends on where they're domiciled for tax and where the work is carried out. Of course, in a global interconnected world where I'm sitting in Bratislava doing some software development for a company in England, is that work being executed in Bratislava, or is it being executed in England where it's uploaded? These are very tricky questions and very interesting ones for lawyers and terrifying for everybody else, I think.
I think you probably summed that up, Stephen. This is going to be, the 2021 head scratcher, and 2021 and going forward is going to be, I think, the time where we put our IR35 sort of difficult questions on the back burner. They're all coming out now. They're all in practice going to be worked through. We're going to see the tax tribunals working them through. We're going to get a whole load of conflicting probably decisions, as we have with, you know, sort of traditional IR35 to date. But what I would say is that, you know, that there aren't any easy answers to IR35, and particularly when organisations are often putting quite complex structures in place to try and get round perhaps IR35 as well. So please do come and, you know, seek your specific support. We can only cover, you know, the generalities in a webinar like this. We are past 11 o'clock, so I'm very conscious of the fact that people have got things to do. So thank you all very much for your questions and for your attention during this morning's webinar. Please keep an eye out for the next webinar in April, probably towards the end of April. We'll be sending details out in the next couple of weeks, and we look forward to seeing you then. Thank you very much, everybody.